Tomorrow morning, Sea Limited will report earnings before the market opens, and it's a really important company to watch for a lot of investors. Now, you might not be familiar with Sea Limited. It's kind of a three-headed monster. It's an e-commerce company like Amazon, a payments company kind of like PayPal, and even a gaming company like Take-Two Interactive, all rolled into one, mostly in Southeast Asia. So what should investors watch for tomorrow morning when the company reports? We'll spend the next couple of minutes figuring that out. My name is Brian Stoffel. At the time of this recording, I do own shares of Sea Limited. Three numbers that I'm going to watch. I'm not going to react to 50 numbers. I'm going to decide beforehand what are the three most important things beforehand and decide what is a green, really great result, a yellow, a decent result, and a red, something that might cause me to change my mind. And all of these are for Q2 of this year, which the company is reporting. All right. Metric number one is gross merchandise volume. That is the value of all the stuff that is sold on Shopee, which is Sea Limited's e-commerce site. Now, this really matters because it tells you whether or not the company is taking market share in Southeast Asia and Brazil. Now, there are some foreign currency things that we've got to keep track of, but at the end of the day, what this really comes down to is the company being hindered by TikTok Shop, or are its investments in logistics and fulfillment helping them gain market share? Now, when we look at GMV, we can look at where the company has been in the past. So as you can see, they're routinely doing now over $30 billion per quarter in gross merchandise volume. And importantly, the growth rate of GMV has really done very well ever since back in the holiday quarter of 2023. It's been slowly creeping up, 28% in the year ago quarter to 28, and then to 30% last quarter. So when I think about what I want to see this quarter, 30% plus growth in GMV would be a green. Between 20 and 30%, the company guided for 25% GMV growth for the full year. So maybe you should say 25 to 30% would be yellow. Anything below 20% would definitely be a red. So that is metric number one. Now, before we get to metric number two, I just want you to know that if you enjoy knowing these things before a company reports, this is built in. It's part of my stock investing program, Stock Investing Mentor. In fact, it comes with three pillars. The first pillar is real-time access to my real-life portfolio that is over 90% of my family's net worth. You also get access to the antifragile stock universe. Every stock that I own or watch, rated for anti-fragility, valuation, and you get this data right here. What are the most important things to watch? 1 hour of live weekly training and 24/7 access to a private online investing community. And if you join Stock Investing Mentor, you will also get to use Stock Simplifier Pro absolutely free. That's a $400 value. So if that interests you, simply click the top link in the show notes below and you can get 10% off of an annual membership. And if you're wondering what Stock Simplifier does, it breaks down all the different parts of the business. For instance, it is showing that while Sea Limited might have a narrow moat, it is widening. And look at this, it has a moat in all five. But if you want to read more, again, join Stock Investing Mentor. Let's get to the second metric that I am going to be looking at. And it's actually a combination of metrics. As I said, there is a fintech arm, a lending arm, a services arm for payments, and that is called Money, M-O-N-E-E. And I'm going to be watching both the growth at Money and the credit worthiness of its portfolio. So we've got to make sure it's still growing, but we also want to make sure that they're doing a good job of lending. Now, the best kind of metric that we can look at for this that is always broken out is simply the amount of revenue from money services. So you can see that it came in at about $1.2 billion in the year ago quarter. And it's been up and down, showing 70% growth in the year ago quarter, 57% growth in the most recent quarter. The loan book did grow even faster at 72%. But I'm willing to take kind of the whole pie picture here. And so what I'm going to be looking for is that money services grows by at least 55%. And most importantly, its non-performing loans dips to 1% or lower. It has been between 1.1 and 1.2% for quite some time. And when your loan book is growing as fast as Money's is, you want to make sure that they are quality loans, because if they aren't, it can turn into trouble very, very quickly. So if it's 1% or lower non-performing loans, that's great. If Money Services growth comes in between 40 and 55%, that's fine. If the non-performing loans is between 1.1 and 1.2%, not great, but not terrible. However, if Money Services is growing slower than 40%, or the non-performing loans are larger than 1.2% of the book, then that is a problem. Finally, the third metric that I'm going to be watching for tomorrow is the take rate for Shopee. Because Shopee does some things where it can flex its muscles and show that it can extract more value from merchants, like advertising, but it can also give things away. It can basically buy its revenue growth by giving away logistics for cheaper. And this is something we've seen happening at Mercado Libre as well. Overall, I understand why they might give away more for logistics, because they're showing off the logistics muscles that they are building out against TikTok Shop. But you want that to be, while you're giving away some, you want them to be taking more on the other side of the transaction. So when we look at the take rates, what I want to show you is that historically the company has done a very good job of growing its take rate. From 11.1% of all GMV became Shopee revenue back in September of 2023. As you can see, hasn't been a perfect line, but it has steadily grown over time to 13.7% in the most recent quarter. If they can be 13.8% or higher for this quarter, that's green. That's great. If it's between 13 and 13.8, that's fine. But if it drops below 13%, that would be worth digging a lot more into for myself. So those are the big three things that I'm watching. Plus, one bonus thing that's going to be really important is to watch the guide. Again, the company guided for 25% GMV growth. That's the biggest one. If they revise that guide upward, or if they get really great GMV growth and don't revise that guide upward, that will be telling as well. So these are the three key metrics that I will be watching moving forward. I'm curious, what are you watching when Shopify reports tomorrow morning? Let me know in the comments section below. Until next time, Brian, out.